Hello, everyone, and welcome to the October Cannabis Industry Roundup with GreenGrowth CPAs and Arcview. We'll be getting started here in just a moment, but we're going to let the room fill up, so just give us a second here. And so this is the now second we're doing in the stream. We'll be doing this every month, where we've partnered with our friends at Arcview, and we're bringing on their leadership team to come on and discuss the latest events in the cannabis industry, what they're seeing in the space, what we're seeing, and any trends, important things to share. So this month, we are very pleased to announce that we've got Jeffrey Finkle, CEO of Arcview, and David Abernathy, principal from Arcview Consulting. So we'll bring them on right now.
Hello.
Hello, Jeffrey and David. Thank you so much for joining us today.
Hi, Chris. Thank you.
Great. So let's just dive right in. So one of the biggest topics that's happened this month was the return of the biggest live event in the cannabis industry, MJBizCon. So you guys were there. I think you've gotten rested up. You're feeling good again. Let's talk about what were your impressions of the event? Anything big or exciting happen?
It's certainly interesting getting back to live events, especially such a big live event. There was clearly a lot of pent-up demand. People were looking forward to getting together. I know there were a lot of folks who were also hesitant to get together. I wasn't super happy about going and being part of a conference of 20,000 people. I've since gotten 2 negative COVID tests since I got home, but yeah, it was a good event. I spent lots of time meeting with folks, and there was also a second event, MJ Unpacked, that overlapped pretty dramatically with MJBiz. So I attended that as well, and yeah, I think it's a sign that we're starting to get back to some sense of normalcy.
Now, what was the difference between, maybe you could take this one, Jeff. What's the difference between MJBizCon and MJ Unpacked?
So MJ Unpacked is a new entry into the cannabis event business. I would say sort of the easiest way to understand the difference is MJBiz has really evolved to be more of a supply chain show, right? If you walk the floor, if you look at the exhibitors, you see a lot of ag tech companies, you see a lot of packaging companies, extraction services. Really, from the way I would think about it, it's almost cultivation down. MJ Unpacked is really trying to be the showcase for brands to meet retailers. It's really more of a brand showcase, and a lot of their content in their content sessions were really geared towards how brands break out, how they expand, how they prepare for growth, what are some of the best practices. So I think that's pretty much the difference in really who it's serving and really where its content is focused.
That's great. So it's a nice pairing then to really hit the full ecosystem. And what was your sense of the excitement around just that whole week, Jeff? Like, agree with David?
Yeah, I mean, I agree with David. I mean, this was the third in-person event in the I don't even call it the post-pandemic era, but let's say the advanced pandemic era. We were a co-sponsor of an event in the Hamptons in August, where we had 700 registrants and over 600 showed up. And more interestingly than the fact that they showed up, the originally scheduled weekend was the weekend that Hurricane Henri hit, and Ground Zero was the Hamptons, so it was called off at the last minute, rescheduled for the following week, and they still had roughly 600 attendees, which is really remarkable when you really think about it. The Hamptons is not hotel friendly. It's not like you can just change your reservation. But I think what it speaks to is the notion of, as David said, pent up demand to conduct commerce in person. I, for one, have never been sort of troubled or turned off by Zoom. I think it's a good way to be efficient and to sort of experience intimacy and develop relationships. But I think I'm in the minority, and you can kind of see the pent up demand in these. So that was the first one. The second was the Prohibition Partners event in New York. I think the capacity there was 350, and it was full to the brim. So there is, people want to conduct commerce in person, and MJBiz is sort of the granddaddy of them all. I think when their final numbers are published, I think it'll bear out that it was a huge success.
Yeah, that's great to hear. So did you have something to add there, David?
Yeah, to Jeff's point about people liking Zoom or not liking Zoom, I think that there are definitely some advantages to Zoom. You can be in a lot more places over the course of one day if all your meetings are on Zoom. And you can develop a kind of relationship that's much harder with in-person relationships, but there are also some kinds of business that are harder to conduct online. And I spoke to one investor in particular in Vegas who had been part of sort of ongoing negotiations around an acquisition from one of his portfolio companies, and really because he was negotiating something that was potentially contentious, the fact that he had never met the person that he was negotiating with meant that there was like a sort of lack of interpersonal connection, and it got easy to get caught up in the more contentious side of things. They actually ended up meeting in person and liked each other much better once,
so they squashed the beef in person
to like interact as humans.
Yeah, it's always funny to me as well that the idea of the business phone call is essentially completely gone now. All business meetings are now on Zoom, which used to be a little more rare, and so the almost complete anonymity of the phone call is gone now. Zoom has taken place as a hybrid, so it's probably the new normal moving forward.
Well, the one thing you don't know in Zoom is the height of your person you're having the conversation with. That's always the big surprise.
Absolutely, and
that's a big one. They're 6'5", and you had no idea.
Yeah, that comes with us a lot. Our lead audit partner Marco is 6'10", and so he surprises a lot of people when he first meets them. But it's good. And one of the things we talked about previously, David, you had a really interesting observation about the cannabis kiosks in Las Vegas. Can you tell us a little bit about what that was?
Yeah, so I was walking from the Cosmo to the MGM Grand or something, and I passed a bunch of these little like mall kiosks. The same kind of thing you would see for cell phone cases at a mall, or maybe cell phone screen repair or sunglasses. But they were selling cannabis. It was awful looking cannabis. It was really, really terrible. And I stopped at maybe 7 of these places, both kiosks and little hole in the wall retailers. And I was a little confused because they clearly weren't complying with all of the regulations that exist in Nevada for selling cannabis products. But they were in fact selling cannabis products. I later found out, I think the next day, that they're selling hemp products. They're not telling people everything about their branding, everything about their messaging suggests that they're selling flower and edibles and various other products that would get you high, but they're all CBD, which is really slimy. There now is Cookies has a dispensary on the Strip, but and there's some other dispensaries close by, but I can only guess that there are thousands and thousands of people that are buying this awful quality hemp flower and thinking that they're getting cannabis. It's very expensive also.
So it's expensive. It's under 3% THC. That's
under 0.3%.
A lot of headaches. 0.3, sorry, 0.3. So wow. Well, yeah, it's an interesting new market development, I think, that I hope does not spread out, and it'll be interesting to see how the regulators in Nevada respond to that. So hopefully they'll get that taken care of pretty quick. So moving on to some.
Las Vegas
sorry, go ahead.
Las Vegas is a super interesting market. All the big retailers there pay kickbacks to cab drivers and Uber drivers for dropping off people $15 to $25 per drop off, which is a really big incentive for drivers to convince their passengers to go stop at dispensaries. That's the only market that I'm aware of where that's happening on a large scale.
Yeah, it's a time-honored tradition from the clubs and some of the other types of entertainment, and so it's interesting to see that transition over into the cannabis as well. And it speaks well to the profit margins that the dispensaries right in the strip, that they're willing to take that burden on,
or at least the level of competitiveness.
Yeah, exactly. At least
just to survive, they need to get a lot of traffic in the door.
Mm-hmm. Sure. So moving on to some industry news. So we're just going to talk about a couple of topics that have emerged in the last month since I talked to David last month. And so first on that, it's probably one of the biggest news items in the last couple of weeks, and was the announcement that Warner Brands has signed an agreement to get acquired by our big brother up north, Canopy. So it's a very similar to the initial deal that Cannabis struck with Acreage. Even some of the numbers line up, and with the same contingency on once of an option to acquire the entire company once federal legalization in the U.S. passes. So, Jeffrey, can you offer your thoughts about what this means, where we're headed?
Yeah, I mean, I think you're right. It's similar in structure. It's an option, a very expensive option to acquire the company once prohibition is repealed and it's federally legal in the U.S. I think it speaks to two facts, right? One, that the Canadians realize that the North American market is mostly the United States in terms of growth and size, and that they need a play. Number one. And number two, the importance of winning brands as cannabis really transitions from what initially was, all about efficient operations and cultivation and grow, to now being a CPG business where brands are going to matter. We've seen this in other acquisitions. Ayer's acquisition of Levia in the beverage category, and we're going to see a lot more going forward. This business is transitioning to a CPG business, and you're going to see more evidence of that as time goes on.
Can you explain a little bit about what you mean by a CPG business? So we're talking about the big brands like a Coca-Cola or that kind of thing, right?
There's strength in brand equity, right? And so it affords a maker to build brand loyalty and customers, protect margins, and before it was just getting weed on shelves, right? Now it's about creating a brand promise that can identify with a consumer or consumer persona that will stick with that consumer and create preference so that's the one that flies off the shelf. And it was less important in the early stages of this industry, but now it's of critical importance. And it's not really surprising. I mean, even look at the change in management last year at Curaleaf. The new CEO is a CPG background. And you'll see a lot more of that. It's just going to become important, which is why MJ Unpacked, I think, is sort of on the right track with really focusing on the brand side of this from an industry trade exposition point of view.
And we're helping clients a lot with understanding consumers, understanding branding and messaging. For some clients, we work with mainstream branding firms that have a lot of experience building brand strategy, but may not have the cannabis industry experience. So we can provide both access to really good granular data about consumers, as well as insight about why they do what they do, why they're buying certain things, what are the things that are important to them, what are the things that are less important to them, how to generate brand loyalty, when brand loyalty might not be the most important thing that you should be chasing. And when you look at other industries, right, if you look at coffee or alcohol, right, it's not the people who grow the coffee who are making a ton of money. It's not the people who grow the corn or the wheat or the potatoes or whatever is going into making the alcohol or making the money. It's the brands, whether that brand is a retailer like Starbucks or a company like Folgers or a small boutique brand like Blue Bottle. Those are the, or a device brand like Keurig. These are the companies that are really making a lot of money in those industries. And as cannabis continues to become more commodified, and as the sort of artificial regulatory strongholds that exist in states now continue to erode, we'll see a market that looks a lot more like other traditional consumer packaged goods brands.
That's really interesting. You're suggesting a pretty big disruption to sort of who are the market leaders in the cannabis industry. Do you think cultivators with well-known brands will still be able to have that sort of niche, excellent flower reputation, or is that going to start to fade away? Like name the top corn grower in the U.S. I have no idea.
Yeah, I think that there's a sort of a long tail for folks to make money in cultivation if they're in the right position. I also think that there are some lasting advantages to vertical integration that are likely to persist for quite a few years. And there are some kinds of brands, right? Like small craft brands that are really building a brand that resonates with consumers around understanding where their cannabis comes from, understanding that it's all natural, the techniques growing that are being used, the specific genetics, those kinds of things really work better if you have control of the supply chain. So I think there's a bright future for small craft cannabis brands that have tight controls over how they produce their cannabis, as long as they exist in a regulatory situation that allows them. There are some states that it's just not feasible to be a small cannabis company.
Yeah, and it seems like what we're really headed toward is the next phase of cannabis is really going to be a brand war. You guys agree with that? It's going to be about building and establishing brands. We see a couple of leaders emerging already. You mentioned Cookies, one of the most well-known brands, vertically integrated, branching into all kinds of things. And then, Canopy goes straight for by most metrics, what's considered the largest edibles brand in Wana. So we'll still see this pattern playing out.
Yeah. Go ahead, Jeff.
No, yeah, I mean, it'll be a combination of in-house grown brands. Remember, it's not over yet, right? It's still very early. We're still state by state. Each brand that has a stronghold in a given state is, expanding via licensed partners in other states. I can't say the war is won. So an MSO that controls distribution, that controls shelf space at retail, that controls its supply chain is in a pretty good position to develop brands themselves. So there's going to be a mix of that. Certainly, the top few brands in each category will get acquired, but you're going to see a lot of brands being developed by those providers now because they have all of the assets that are needed to win and to win with a deeper margin, right? They just have to kind of go to work with that focus and create the brand persona, the brands that scratch the itch of various consumer personas.
Yeah, and looking forward, I suspect that maybe 80% of cannabis will be produced by really large companies. The one thing that big companies have a hard time doing is getting the consumers that are really focused on authentic craft brands. And we see that in beer, we see that in wine, we see that in beverages, right? Like all sorts of industries, coffee. Starbucks can't make a brand that resonates with that consumer looking for a craft experience, but they can buy a brand doing that, and they will. And so we see that over and over again. As many times as Budweiser tries to make Budweiser Select work, it just doesn't. They can't make those in-house. So they'll wait for the craft brands to pop up, gain some traction, and then they'll buy them and slowly dilute that brand promise, and then find themselves in the market
until it's
for another
genericized.
new brand.
Right, till it's genericized, then rinse and repeat.
Yeah.
Yep. So it's sort of an endless
creates an
cycle, which is actually, yeah.
For people who can create good small brands, right? Now all of a sudden they don't just have a business that's a good small business, but they have a potential exit opportunity at the end.
Yeah, and that's great because that cycle will keep repeating itself, just like you said, as that brand equity dilutes. Related to that, so as you mentioned, the MSOs are making moves. We're seeing a flurry of M&A activity. Not so much the big show-stopping mergers. I think the biggest one this year was obviously Trulieve acquiring Harvest, which also just recently got finalized. But what are you guys seeing in the M&A market as far as what are the drivers for both buyers and sellers? Why don't you start us off there, Jeffrey, or David? Yeah.
As the industry grows, scale is important, capital is important. When MSOs try to expand their footprint in other states, it's sort of a natural evolution. So that's why we're seeing lots of, consolidation going on right now. Most of it, if you look at even corporate financings as well as M&A, it's pretty much, notwithstanding WANA, notwithstanding Levia, the overwhelming majority on an absolute dollar basis is MSOs or aggregators buying cultivation and retail in other states. It's not the software industry, certainly Dutchie sort of combined with Greenbits and LeafLogix, but they're the outlier transactions. It's still dominantly in that one subsector, cultivation and retail.
Yeah, we're starting to see some of those aggregators that control some amount of, especially retail distribution, starting to buy brands. That's happening in California. We're also seeing cultivators that haven't generated their own brands in-house buying brands. So some of that's happening. But yeah, a lot of it is a race to expand footprint to get licenses. And in terms of the sellers, this isn't universal, but certainly I know a lot of executives who are very interested in selling because cannabis is a terribly difficult business to operate in, and many of them have been building these really good businesses for years, and some of them are burnt out. They feel like it's time they built something that's good enough that they can hand it off to an acquirer and go sit down for a few minutes.
Yeah, and they earned it. This first wave of entrepreneurs is doing work that 4, 5, 10 years down the line, when everything is smoothed out, the new wave of entrepreneurs will have no idea how much work went into building this from the ground up. So respect to the originators. Yeah.
Just to give you an idea, we have a client that launched a brand in California, and we signed on to help them grow that brand, and ended up connecting them with a partner who acquired them almost right away. They had literally just done a test run that had sold out in dispensaries, and before they even really got the brand off the ground in a real way, it had been acquired, and we're helping them launch several other brands no.
Yeah, that's great. Yeah. Similarly, we're getting a ton of work right now helping both acquiring businesses, acquisitive businesses, vet and do due diligence on potential acquisitions, and on the other side, helping a lot of our clients who are in the position you're describing get ready to sell. They're feeling burned out. They're seeing in trouble with the fluctuating markets and so on. They're ready to move on, and so we're helping prepare to sale as well. One more topic I wanted to get into before we run out of time here is this is a sort of underreported, I think, story, but I think it has really wide-ranging potential to reshape what we understand as regulations in state markets. And that was the federal judge blocking the residency requirements in Missouri. And a couple states still have the residency requirements, but we're also seeing successful court cases challenging social equity requirements and things like that. So can one of you just comment on where you think we're headed with the federal government stepping in and really affecting and shaping what is ultimately the state regulations?
Yeah, I mean, it's interesting seeing these court cases. I think a lot of what folks have created at a state level wasn't necessarily created to survive strong federal challenges. I mean, this is an industry that fundamentally is violating federal law, right? The fact that states are legalizing cannabis is sort of at cross purposes with what federal law says. So it is interesting to see the federal government come in and start to like pick at little parts of the laws like residency requirements. It's not unexpected. And I suspect that it will drive what future state laws look like. There are certainly the folks who are drafting laws are paying attention to what's going on with these court cases.
I mean, even
So much
early
about
on.
it. Yeah, go on. Yeah, please go ahead.
I'm not familiar with the Missouri issue, but I imagine it's a residence requirement to be an operator. Yeah. Earlier on in Colorado, I think maybe California, David, correct me if I'm wrong, you couldn't invest if you weren't a resident. It's a Colorado
Washington
statute
had really strong, and I think maybe still does have pretty strong residency requirements for investors.
But in large part, that requirement has mitigated and has gone away in many states. I don't know. Washington may very well still have it, but it's an evolving process. As David said, I mean, this is new ground, like a state legal business that's in that gray area between state legality and federal illegality. It's a lot of moving pieces, and there'll be a lot more moving pieces before it's all settled. So the only one thing we can be sure of is to expect change.
Yeah. In 10 years, the industry will look almost nothing like it looks today. I think there's a lot of open questions about exactly how it will change and on what timeline. But certainly, companies should not get comfortable. We've seen over and over again companies in the cannabis industry who have a good business one day and a regulatory change the next will make the ground disappear from under their feet. So it's really important to pay attention to what's coming. I sit on the board of MPP and MCBA. Both of those organizations are very deeply involved in policy change at both a state and federal level. So understanding what's coming and preparing your business for those eventualities, I think, is super important.
Yeah, absolutely. And when we were discussing this earlier, David, you had brought up the dormant commerce clause and essentially suggesting that as the federal government gets more involved in the cannabis industry, gets more accepting, that things like blocking interstate commerce is destined for the dustbin. Can you explain a little bit about Dormant Commerce Clause and what kind of impact that's going to have?
Sure. So if the federal government doesn't specifically ban the interstate trade of cannabis with whatever legalization bill they end up passing, which I think is very unlikely, right? The federal government has not done that sort of thing in the past. Then states will not be able to restrict interstate commerce. The Constitution does not like things that restrict trade between the states. There have been many court cases about this involving everything from avocados to grapefruits to dairy, and you're not allowed to pass laws that states are not allowed to pass laws that would restrict trade between the states, and they're not even allowed to create regulations or tax policies that are primarily designed to favor domestic producers or domestic businesses over out-of-state businesses. There are a few sort of strange cases like insurance, but even that is starting to change. Most of the folks that I talk to agree that ultimately cannabis will be freely traded between at least whatever states have agreed to legalize cannabis. The big question is the timeline for federal legalization, and we're advocating for a transitionary period from no interstate commerce to interstate commerce that will last some number of years, because as it stands now, if cannabis were legalized tomorrow and all of a sudden interstate commerce were legal, so for some of the cannabis businesses, it would be the biggest opportunity that they ever faced. But for others, they would fail almost overnight. It doesn't make sense to grow cannabis in some parts of the country, right? We don't grow avocados in Maine, not because it's scientifically impossible to grow avocados in Maine, just because it's absolutely ridiculous. Our agriculture is centered in places where it's efficient to grow agricultural products, and ultimately that will be true of cannabis as well.
Yeah, absolutely. Do you agree, Jeffrey, that interstate commerce is essentially the writing's on the wall? It's gonna happen with legalization and whatever timeline legalization happens on.
100%. I think there's a case that it might happen before that. There's talk among neighboring states to create commerce treaties that will get challenged. Before he was replaced, Governor Cuomo was all about that as he sort of contemplated state legalization in New York. Not sure how that will turn out, but 100%. This industry is going to be tremendously inefficient, never deliver the kind of return on invested capital that it's capable of if interstate commerce isn't wide open. As David said, I give the same example, but I always say Minnesota, not Maine. It doesn't make sense to grow in expensive, in states with climate that's not conducive to growing, with cost of labor that's high, right? So you're going to see that shift to where it rightly should be done. And I think that many companies, MSOs that have cultivation footprints in northern states where it's not practical, are going to have to divest a lot of those assets. Not to say that it was a mistake for them to invest in those assets and start their businesses if they had to, but I do think about how that will contract in the going forward years.
Yeah, right now there's still this artificially siloed environment where people not only can make money growing cannabis in every state, but have to make money growing cannabis in every state, right? There is no current alternative. If cannabis sales are legal in a state, the entire supply chain has to exist within that state.
Yeah, and there's already been movement, like Jeffrey mentioned, towards at least regional connections, even before, I believe, New Jersey and New York had even legalized. This was a couple of years ago that they had entered into a tri-state pact that would sort of create at least the structure for eventual trade. And I can see similar things happening just on the West Coast between all of the coastal states, and including Nevada and so on. So it is certainly inevitable, and it should be a part of every major cannabis business plans to capitalize and react to when it does happen. So
states like California stand to benefit immensely from interstate commerce. California has grown the overwhelming majority of the country's illicit cannabis for many years, and are both the number of really good growers in California and the scale at which we're able to produce cannabis, both in the legal and the unregulated market, is truly impressive. And ultimately, California growers who can make that transition into interstate commerce and start supplying cannabis legally to other states will likely do very well.
Which is a big ray of hope. I know we're dealing with a lot of issues with our operators here in California, where there's a lot of supply. There's still limited demand, mostly because townships, cities have been slow to adopt cannabis regulations, so the market isn't as big as it should be, and they're sitting on a lot of product. And once that interstate commerce does open up, that's going to alleviate a lot of that pressure. And so to all you cannabis cultivators out there in California, like, stick with it. The opportunity will be coming, and so on. So, well,
the other big one is taxes.
Mm-hmm.
California companies are having a hard time competing because the tax and regulatory structure make it hard to compete against the unregulated market, which if the taxes were at all reasonable in California, the legal market would very quickly start to cannibalize the unregulated market, and we wouldn't have to have stupid conversations about enforcement. We've tried enforcement for many decades, and we know for a fact that it does not work. If there's an economic incentive for growing unregulated cannabis, people will do it. So you have to outcompete it.
Yeah, and we've seen some shifts in that direction. There are some new regulations have been proposed and voted on, and I think we in the industry understand that very clearly, and I think regulators and lawmakers are starting to come around, and the new markets that are opening up, I do see, are trending towards more reasonable structures, and so hopefully California will catch up on that. So we are at the end of our time here. So I just really wanted to thank you both for joining us today. Really appreciate you having you guys on.
Thank you.
Chris, thank you.
Great. And so thanks for our audience as well. And we'll be doing this every month. So stay tuned. We'll be having different guests on discussing all the latest news from the industry. So we hope to see you all again soon. All right. Thank you.